Oh, we have seen a sharp downtick actually in the last few minutes. We were struggling as it is. Now we have moved to the low point of the day. Pull up the Nifty, the intraday chart, 10,720. L&T has moved to the low point of the day. You have Maruti as well that's seen some selling. A couple of these heavier stocks as well have moved lower. Pull up SBI. SBI, I think, as well has seen some selling. And Hero MotoCorp that was holding well in the green. The intraday chart will tell you. The stock was up 2.5% approximately just around 15 minutes back. Hero MotoCorp has given up some of those gains. And that's why in the last few minutes, the culprit, though, is L&T, HDFC and Infosys. All three intraday charts will come up for you, and that will tell you exactly why the Nifty has suddenly seen that sudden 10 to around 12-point downtick. HDFC, look at that. It's down, barely around 1.5%, but the bigger fall has come in the last 10 minutes. So you put them together, you're talking about L&T, HDFC and Infosys. That's nearly around, close to around 20% on the index, or roughly around 17% on the index. But plenty of earnings expected today. Now, Mangalam joins us to run us through what we can expect from Nestle. Mangalam?
Well, Nigel, Nestle, the stock is just about 10% away from its record high, one of the pricier stocks in the FMCG basket. And it's an irony when one says it's a pricier stock in an FMCG basket, which any which way is pricier. So Nestle trades at around, 52 times FY20 earnings. The street is working with a 12.8% growth in the company's top line. 2935 crores is what our cnbc TV18 poll throws up in terms of Nestle's fourth quarter calendar year 18 revenue. EBITDA is likely to grow a little faster than the revenue. Margin expansion is on the cards. So an EBITDA number of close to around 731 crore is something that the street will like, which means a margin of close to 25%, which is a 20 basis points improvement. Most of that would be on account of gross margin improvement, as the input basket for Nestle has been fairly benign. Net profit optically would be a growth of 43%, but if you adjust for the impairment in the base quarter, close to around 81 crores, that means the net profit would be 446 crores, which is a 13.5% growth on an adjusted base of close to around 393 crores. What will lead the growth? 11 to 12% of that growth will come from the domestic business, which is the majority of the company's business, while the subdued performance for export revenues may continue. Close to around 7 to 8% growth is something that the street is working with. Raw material prices have remained benign, so expect year-on-year gross margin expansion. However, there has been some inflation quarter-on-quarter, so maybe some compression quarter-on-quarter in the gross margins is on the cards. Ad spends will increase to support new launches. The company has been increasing their launch pipeline, or have been adding new products from their portfolio abroad as well. So keep an eye out on other expenses as a percent of sales too.
All right, Mangalam, thanks very much for that. So what about Voltas then? They'll also be reporting numbers. Anisha is here to stack up the expectations. Anisha.
Well, Samara, the key number to watch out for Voltas will be the margin figure for the AC business. Because remember, in the last quarter, it had seen a sharp decline and came in at just 6% versus 12-13% that has been the run rate last year. So there was a dip of almost half when it comes to the AC margins. This time, we are expecting that sequentially things should improve. But on a year-on-year basis, there still will be a decline of 400 bips. Talking about the other numbers, well, the trend this particular quarter for the durable space has been that the top line has been decent, but the margin has been hit. That is what we're expecting. The margin, the top line growth should be around single digits when it comes to the AC business, while there are brokerages which are expecting even a decline when it comes to AC business. What would support the top line then? Well, that will be the electromechanical project business of the company, which is expected to show high double-digit growth, and that is what has been aiding the earnings over the last couple of quarters as well. In terms of the key things to watch out for, apart from the margins, we will look forward to management commentary of how the competition is, how the inventory is, will the margins come back to normalized level in the coming quarter, and how does this summer pan out? And lastly, also because they had formed this JV with the Turkish company, we'll want to wait to hear updates on it and how the product launches have done. Back to you.
Okay, all right. Thanks so much for that, Anisha. Well, let's shift focus then on a couple of nifty names. ONGC as well will be reporting its numbers. Sonal's with us. She's going to run us through what we should expect from there. Sonal?
Thanks a lot for that. And yes, ONGC numbers are expected to be weak sequentially. Well, remember the crude prices, they have fallen sharply on a quarter-on-quarter basis. But also remember that gas prices were revised and gas prices were hiked by around 10% effective 1st October of 2018. So while we will see some decline in oil realizations, gas realizations should boost earnings this time around. So overall, in terms of revenues, we're expecting decline of 3-odd%. EBITDA is expected to decline by 5% to that 15,000 crore level. And also Also the EBITDA, that is expected at 55.4% versus 56.4%, basically a 100 basis points decline. Profits also expected to decline by around 11%. So in terms of crude oil realization, we are expecting a decline of 9% sequentially, but we're expecting a hike of around 10% on a YOY basis at $66.5 per barrel. The oil production, that is expected to decline 1% sequentially and 5% on a YOY basis. On the flip side, we're expecting an increase in gas production by around 4% sequentially and 5% on a YOY basis. So as I already mentioned, that the impact of lower oil prices, that is expected to be offset by the higher gas prices that we saw this time around. Also remember that Oil India's numbers were good and they were led by higher gas realizations that we saw. So ONGC could surprise us on the positive side, but let's see how the numbers really are. Back to you.
Sonal, thanks very much for that.